Welcome back to Ghana Online Education. As I have been saying, this platform is here to give you more insight about the courses that you are reading in your various institutions, especially the business aspect. Okay, we are trying to upload more videos concerning the other subject, but for now we are concentrating on the financial accounting. So today I'm going to solve the objective test for NOV 2011 financial accounting. So I'm sure you have the sample question. If you don't have it, you can see it on the screen. You can pause it and write it somewhere, or you can find a means of getting a copy of the question. So let's get started by starting from question number 1. The process of transferring entries from journal to the ledger account is, so let's see option A. Option A is journalizing, option B is posting, option C is summarizing, then option D is single accounting. What is journalizing? Journalizing simply means drafting or recording a transaction in the journal entries. Okay, so making entries in the journal is what is known as journalizing, and this one does not meet the definition above. Let's see posting. Posting means just transferring individual account from the day books or the journal entry to its respective account in the various ledgers. So after recording the transaction in the day books is the primary book in which accounting transactions are recorded first. After recording them, you should post them to their individual account. Okay, individual account in the ledgers. So we could see that the option B fits the definition for the process of transferring entries from the journal ledger account. Okay, summarizing does not meet. Summarizing means just making the final entries or the final recording in the books, or closing the individual account and drafting trial balance or preparing the final account from the books. Okay, so that one cannot also meet the definition. Okay, so we've seen that the option B meets the definition for the definition or the question number 1. So let's have our answer here. So as I've already done, option B goes for question number 1. Write it somewhere so that you can go through when you are done. Question number 2. Creditors' accounts are kept in the... So let's see, what are creditors? Creditors are the people that we buy goods on credit from. So they are the people that they give us goods on credit. And when we buy something from outsiders, the creditors, we have to keep the records, individual creditors. We have to keep their records in our books. But the books of the business have so many differences, so we have so many types of books that the business deals with. And these books are usually known as the ledgers. So the question is saying that creditors are kept in which types of ledger, as you even can see in the options. You can see we have sales ledger, general ledger, we have private ledger, we have purchases ledger. Sales ledger has to do with the book in which all individual credit debtors are being kept in. Individual debtors are being kept in. So those that we sell goods on credit to, we keep their records in sales ledger. So option A can never meet the requirement or the question number 2. So B2 says general ledger. What is general ledger? The general ledger contains the information which cannot be recorded in any other day books or any other general ledgers. Okay, sorry, in any other ledgers. We have so many or different types of ledgers. So if the item cannot be recorded in all the stipulated ledgers, then they should be under the general ledger. So what are some of the information that you can get under the general ledger? You can get information like return outward. So return outward will be found in the general ledger account. Okay, and something like maybe expenses will be also found in the general ledger. So you know that the expenses cannot be recorded in the sales ledger. So all the information, all the items that cannot be recorded in the definite or in the identified ledgers should be recorded in the general ledger. Okay, so the requirement B also does not meet the definition for question number 2. And let's move on to option C, which says private ledger. What is private ledger? Private ledger, we use it to keep records about the owner of the business. So you can find something like drawings. You can find something like drawings in the general ledger, because drawings are information relating to the owner of the business. So if the owner takes something from the business, this record should be recorded in the drawing account, and drawing account could be found in the private ledger. It contains information relating to the owner of the business. So that one too does not meet the requirement or the definition of the question number 2. Let's move on to option D. If you can get that, option D says purchases ledger. Purchases ledger has to do with a book in which all records about creditors are kept. So the purchases ledger contains the information relating to creditors, and the question says creditors accounts are kept in. So obviously the answer is option D, because purchases ledger contains information relating to what? Creditors. So question number 2, the answer is option D. Okay, if you have any doubts or if you have any other suggestions, you can leave it at the comment section and I'll be glad to attend to them. Okay, so let's move on to question number 3. Recording of transaction in accounting is known as. Accounting is all about recording transactions that happens in the business. So we are saying that recording of a transaction in accounting is known as what? The option A says data processing. No, it's not data processing. Data processing means processing the raw data to obtain information. Even though accounting, we do process some information, but recording a transaction does not fall under that. Balancing of an account, that one too cannot be the option or the answer. Balancing of an account has to do with, at the end of the day, the account that you've drafted or if opened should be closed according to the accounting principle. So that one too cannot be that. We have bookkeeping. Bookkeeping, yes, bookkeeping is the answer. What is bookkeeping? Bookkeeping is the art of recording daily transactions in the books of the business. So this option meets the definition for recording of a transaction in accounting is known as bookkeeping. As I said, bookkeeping is the art of recording the transaction in the books of the business. So question number 3 is C. Okay, it's option C. I hope you are following. Okay, let's move on to question number 4. Which of the following is not a type of computer? So this has to do with the computing aspect of accounting. We have analog, we have Microsoft, we have digital, we have hybrid. So obviously the answer should be Microsoft. Microsoft is just a software and it's not a computer. Okay, Microsoft Suite or Microsoft is just a software that has so many packages. And analog is a computer, digital is a computer, and hybrid are all types of, or all different types of what? Computers. Okay, so the answer is B, which is Microsoft. The question says which of the following is not. So the key word here is what? Is not is Microsoft. Okay, so the answer is B. Question number 4. The answer is B. Okay, let's move on to question number 5. Question number 5. It says in single entry accounting, sales are calculated through. What is single entry? Single entry is just making, in accounting, we have to record each transaction at least twice. So in a situation whereby a transaction has been recorded only twice instead of at least twice, it means we are in the realm of single entry. Okay, and when in single entry, so many things arises because the information given is not adhering to the accounting principles. So we have to do so many workings, so many workings. And we are saying that, or the question is saying that in single entry accounting, sales are calculated through what? Or in other words, the question is saying that sales are gotten through, which means when you are in the realm of single entry. So let's see. The option A says statement of affairs. Now, statement of affairs, we use it to prepare the accumulated capital for the entity. So we use it to ascertain the capital for the entity. So it cannot be the answer. Creditors control account. Creditors control account has to do with purchases. Okay, we are interested in sales here. So creditors control account, we use it to ascertain the purchases for the period. The moment you hear creditors, something should come into your mind that we are dealing with what? Purchases, because creditors are the people that gives us goods on credit. In other words, we bought the goods on credit from these people. So the moment you hear creditors, then purchases should come into your mind. So let's see, debtors control account. Yes, the moment you hear debtors, it means you are in the section or in the arena of sales. Okay, so debtors are the people that we do sell goods on credit to. So the moment you hear debtors control account or debtors, it means you are in the realm of sales. So in single entry accounting, sales can be calculated through the account known as debtors control account. So we prepare the debtors control account to ascertain the sales for the period when you are dealing with single entry. So the answer for question number 5 is C. Okay, so let's do that. Question number 5 is C. Don't get confused. If you have any other suggestions, you leave it at the comment section and I will be excited to attend to them. Let's come to question number 6. The net profit of a sole trader is so a sole trader, you all know a sole trader, one-man business, okay? A person managing his own affairs. So we are saying that the net profit of a sole trader is being added to which type of account? So let's go through the options. The first one is debited to the capital account. Capital has credit balance. So if you debit to the account, it means you are rather reducing the interest of the owner in the business. So it can never be the answer, because creditor has credit balance. If you debit the account, it means you are reducing the interest or the amount that the owner has invested. And here we are dealing with profit, not loss. Profit has a positive figure, so it should be added to it rather. So option A cannot be the answer. Then option B has to do with credited to cash account. Now, profits are not credited to cash account. Okay, profit, you see, profit not necessarily mean cash. Profit could, in accounting, profit does not necessarily mean cash, physical cash. It could be in so many forms, especially when you are dealing with statement of cash flow. You get to know much about that. So for now, let's stick to that. Option B can never be the answer, okay, in this aspect. Option C is debited to cash account. No, it can never be so. D, credited to capital account. Yes, the answer is D, because profit is a positive figure and it should be added to the owner capital, because we said the sole trader is the owner. He is the sole owner of a business. He controls all the affairs. He enjoys the profit alone. So that's why we are adding the profit to his capital to indicate that his investment has yielded a positive figure. So profit made for a sole trader in a particular period should be added to the capital account. Okay, the capital account contains the interest of the owner of the business. Okay, so the answer for question number 6 is D. So let's write it here. Question number 6 is D. Okay, it's D. So let's move on to the other aspect of the question. The question says that use the following information to answer question number 7 to 9. Use the following information to answer question number 7 to 9. So we have to use this information, as you can see from the question, to answer question 7, question 8, question 9. And it has to do with some workings. Okay, let's see how we can do that. Provision for bad debts as at 1st January 2009 is 4,000 naira. Debtors figure has to do with 8,000 naira, and the provision for bad debt itself is 3%. 3%. So let's see how we can do or get the answers for question number 7. The question says the provision for bad debt and doubtful debt as at 31st December 2009 is what? Upon me going through the question, I've got to know that the figures here, there is something wrong with it per the answers that they've given. I don't know whether you two have noticed that. As I said, if you have different option or opinion about what I'm saying, you can leave them in the comment section. But to my opinion, I stand to be corrected. I think there is something wrong with this figure, which is 4,000 and 8,000. I think it's supposed to be, especially the debtors figure, is supposed to be 80,000. Yeah, I think the answers here after going through the question. So let's see how we can do the workings. Okay, so provision for doubtful debts for the period as at January 2009 is 4,000. And the debtors for the period, as I said, is supposed to be 80,000, but they made it 8,000. For me, I'm going to use 80,000 because if I use 8,000, none of the answers here fits the options fit the answer, right? It doesn't give me what it's supposed to be. So I don't know the NOV 2011. I don't know what happened. I don't know. As I said, I stand to be corrected. If you have different opinion, just let me know, okay? So that I can also understand what I'm doing. We are all here to learn, or we are all here to help each other. So as I said, the debtors will get supposed to be 80,000. So let's see what we can do. Provision for bad debt as at 1st January 2009 is 4,000. Meaning, in accounting, let's go back small. In accounting, according to one of the principles, is that the accountant shouldn't fail to make provision for losses. So if you anticipate that something is going to happen which is going to reduce the profit in future, you shouldn't fail to make provision for that. I think you can find out that the prudent concept. Okay, so the accountant shouldn't fail to make provision. So in the previous year, the provision that the accountant made, or the provision for bad debt, we are saying that 4,000 will be seen, or it will become bad. It means we cannot recover based on one or two reasons or due to observation that we've made. 4,000 naira will become bad. We cannot recover this amount from debtors. So it's a loss to the business. And then for accountants, in order not to overstate profit, if you think, or based on the evidence that you have, if you think this will become a loss, then you should make a provision for that. So the accountant made a provision in the previous accounting year. So we are in 2009 to January 2009. It means in the previous accounting year, which is 2008, the provision made was 4,000. This 4,000 was already recorded, or has already been recorded in the previous accounting year. Okay, but we are in 2009. The question is, as at 31st December 2009, what should be the provision for bad debt? And the provision for bad debt itself is 3%. Okay, it means the accountant has made a stipulation, or has anticipated that 3% of the debtors will become bad. It means we cannot recover such amount from them. So we should provide 3% as a bad debt. Okay, so let's see how we can get the workings. So I'm going to use some aspects here. So 3% of, as I said, I'm going to use 80,000. 80,000 will give us what? So 3%, let me use my calculator, do it somewhere. So 3% of 80,000 will give me 2,000. 2,400. Sorry, for 4,000 naira. Okay, so this is the provision for that. But when it comes to provision for bad debt, we are only interested in the differences between the previous one and that of the current one. We are only interested because this one has already been catered for in the previous accounting year, and this is we are in the current year, so we have to find whether there has been an increase in provision for bad debt or whether there has been a reduction in provision for bad debt. So let's open provision for bad debt account. Okay, so provision for bad debt account, and provision for bad debt account always has credit balance. So this one will be at the credit side. If you follow, maybe if you have a trial balance, you could always see that provision for bad debt is always at the credit side of the trial balance, because such amount is being deducted from such amount will be deducted from the debtors account. Okay, so in the name of provisions. Okay, so you always see provision for bad debt at the credit side of the provision account. So the first one here, you have balance brought forward. Balance brought forward, and it's 4,000. 4,000, right? 4,000 here. 4,000. Okay, 4,000, as you can see. So if this one should be the balance brought forward, 4,000, and this is the new provision. Okay, this is the new provision, which is 2,400. 2,400. Okay, 2,400. You should get the new provision. I'm doing this working so that the subsequent ones will become easier. There is no need for us to come and pick or do workings again. We just come and pick the information here. So here it will be balance carry down. The new one, don't forget that this one will be deducted from. You get to understand it better when we reach the other aspect of the question. Okay, I want us to do the workings first. So here, because we are going to deduct it from the debtors figure, it should have a balance brought down at the credit side. So if the balance brought down should be at the credit side, it means balance carry down will come here. Balance carry down. 4,000 will be here. So 2,400 will be here. Okay, so let's track the difference between 4,000 and 2,400. 2,400 minus 4,000. So the difference, so we could see that here is bigger than this one, is bigger than this. So here the difference will be profit and loss. We are going to send it to profit and loss account. So we have 1,600. Okay, so this one we could see that there has been a reduction in provision for bad debts. I hope you are following. There has been a reduction. This is the previous provision that they've been 4,000, and the new one that we got is 2,400. It means there has been a reduction in the provision, meaning the debtors have been paying their debt. So if they have been paying their debt, what we anticipated didn't come to pass, or the loss is going to reduce. So here in actual profit and loss account, this one here we are not prepared profit and loss account, but for the period the profit and loss account will be having the credit amount of 1,600, or this one will be added to the profit of 1,600 because there has been a reduction, meaning the previous provision that we made, we overstated it, and if there has been a reduction in it, we should add it to the profit. I hope you are following. Okay, so now we are done with the working. So let's go to the question and see the options or the answer for question number 7. The provision for bad debts and doubtful debt as at 31st December 2009 is what? Answer 6,400. Let's go and see if it is there. 6,400. Is it there? This one, the new one. Is it 6,400? No. Let's see, the answer is 4,000. Is it 4,000? No. Is it 2,400? Yes, the answer is 2,400. So the current year provision of 80,000 will give you 2,400. So the answer for question number 7 is supposed to be, let's see, option what? Option C. So that's why I said there's something wrong with the question. Because if you use 3%, let's see, 3% of the question given, 3% of 8,000. Let's see what we are going to get. Sorry, 8,000. Just take your jotter and write them, okay? 8,000. Let's all do it together. 8%, 3% of 8,000 will give you what? Will give you 240 naira. 240. That's why I said there's something wrong somewhere. 240, but in the solution you don't have 240. So what are they trying to say? What are they trying to say? NOV DEC 2011. I think they made a correction during the examination or something like that. But in my opinion, the answer, the question here, the debtors figure is supposed to be 80,000. When it is like that, then we can get this figure. Okay? So shouldn't follow this. Try and understand what I'm trying to say. If you have different opinion, you can leave them at the comment section. Okay, so the answer for question number 7 is C. So let's see if you have it. It's C. Yes, we have it there. Okay, let's go to question number 8. The net data figure as at 31st December 2009 is what? So as I said, this has become the new provision. So this one will be deducted from the debtors figure, the 2,400. So that's why I said here the balance brought down will be here, so that we will deduct it from the debtors figure, because we are saying that 3% of the data will go back. And in a business, we're only interested in amount or the figure that we can recover. So the question is saying that what will be the actual net data for the period. For you to get that, you have to deduct the 2,400 from the 80,000, the debtors figure. So let's see what we will get. So 80,000 minus 2,400 will give us 77,600. 77,600. So let's see if the options, we have something like that. So we have 77,600 to be the option B. So question number 8 is option B. Okay, so let's see, let's use the information to see if you can get that. We get 240, so 8,000 minus 240. What are you going to get? You don't have it in the answer, so there was something wrong. So if you do that, if you deduct 240 from 8,000 per their question, if you are to go by that, you get 7,760. But here we don't have 7,760, so it's way from the answers. So that's why I said there's something wrong with that. So the debtors figure, according to my opinion, is supposed to be 80,000. So stick to that. Okay, so let's go to question number 9. The provision for bad debt recorded in the profit and loss account is, so let's go back to our working. That's why I said let's do the working so that we can just pick the information from here. So you could see there is a profit and loss. The question is saying what is supposed to be the actual amount to be recorded in the profit and loss account. It's supposed to be 1,600 naira. So per the information that I've given, or per the observation I made, and I changed the data figure, we could see that we have 1,600 to be the actual amount to be transferred to the profit and loss account. So question number 9, the answer is C. The answer is D, which is 1,600. Question number 9, the answer is D. So the answer is D. Question number 9, the answer is D. Okay, so if you use the information given as per the question, you will not get all these figures. So try and understand what I'm trying to say. So question number 9, the answer is D. Let's move on to the other aspect. I think I'll be ending on question number 10 and I'll continue later. I don't want to make this video very long. Okay, so we are done with the working. So you can pause the video somewhere and write this working somewhere. 3% of 80,000 will give you 24,000, which becomes the new provision. Then you prepare your provision for bad debt account. Always the provision given in the previous statement should be at the credit side of the account, because provision for bad debt always has credit balance. So that's why I brought the 4,000 at the credit side of the account. Okay, when you do the differences, you should get 1,600 to be transferred to the profit and loss account. So let's see the last question. Which of the following is not recorded in the trading account? You know trading account for a sole trader. You should know the item over there. So which of the following is not recorded? Opening stock. Do we have opening stock in trading account? Yes. Which of the following is not recorded in the trading account? Opening stock, we have purchases. Yes, we have purchases. Carriage inward. Yes, we have it. Then carriage outward. That one too we have. What is opening stock? The opening stock has to do with the goods that we couldn't sold in the previous accounting year and it has been brought forward in the subsequent or in the current accounting year. So does opening stock form part of the trading account? We have sales. Trading account, we have sales. Then we have the cost of sales. Cost of sales, do we have opening stock? Yes, we have opening stock because it's form part of the cost of goods sold. We have purchases there. That one too is part of it. So carriage outward, we have carriage inward. Carriage outward has to do with the good that we sold to the debtors, and when you are doing the transfer, the cost that you incur on them. So this one does not form part of the trading account. It is always found at the expenses side. But carried inward, it has to do with the expenses that we incurred in bringing the goods into our business. So obviously the answer will be D, because carried outward has to do with the cost that we incurred in transferring the goods to the customers. So it will be found at the expenses side of the account, and then the expenses side comes after we are done with the trading account. Okay, the trading account only ascertains the gross profit, and for you to get the net profit for the period, you have to add the profit and loss aspect to it. So that's where we will bring in the expenses. So the carriage outward does not form part of the trading account. Opening stock is part, because it is the goods that we couldn't sell them in the previous accounting year. It has brought forward in the current year. So it will form part of the cost of goods sold. Purchases is also part of the cost of goods sold. Carriage inward is also part of the cost of goods sold, because when you buy goods, the cost that you incur, you have to add it to know your actual purchases or the cost of good bought for the period. So the answer for question number 10 is D. Question number 10 is D. It's quite confusing, but should try and understand. The answer is D. So this is where I'll end the lecture on this. I will continue on from question number 11 later, or in different aspects of the lecture. Thank you very much for having interaction with us. Try and subscribe to our channel so that you don't miss any future tutorials. Try and share this video with your friends on all your social media accounts. And if you have any question or suggestion or opinion, just leave them in the comment section. Thank you very much and see you soon.